morning, good afternoon, or good evening. No idea what time you're watching this, but it is 4:31 a.m. Monday morning over here where I am. I have a slightly inaccurate but pretty good weekend Wall Street, something people have used for close to a decade, if I can recall, at least from when I've been using it. Talking about where the Dow futures are. And right now we are looking at plus 74 points, plus 0.2% as far as what should be the gap up when futures open in 90 minutes. Looking at the week ahead, it is the official start to earnings. This week and next week, you get everybody, other than NVIDIA, everybody reporting. Tuesday after the close, we've got Tesla, Visa, Tuesday morning, UPS, Pepsi, Lockheed Martin, Spotify. Spotify will be interesting to trade after the market opens on Tuesday, depending on what we've got with it. Wednesday, we have crash and burn Boeing. Nothing else really that I have any interest in the morning. Wednesday after the close, Meta, which, as much as we might hate Meta, it's not the stock to short. And the reason being is because you're in an election year. There is nowhere to run ads except Meta. Yeah, Microsoft, yeah, Google, but Meta went out pretty intelligently and bought every little tiny company out there. So if you're going to run ads, no matter what, you're running them on Meta. And if they don't imprison Trump, there's going to be more money spent on this election in advertising than ever in the history. And yeah, other than that, and as much as I despise Meta, I just don't see the benefit of trading it when you could trade the QQQ, which we already have. You have Chipotle Mexican Grill, which, again, when it made that run up above 2000, I stopped watching it. We used to trade it weekly back in 2016, 2017. It was fantastic. I'll look at it and pay attention to it now with the stock or the stock split having occurred or occurring. Like I said, I haven't looked at it. Thursday, Royal Caribbean Group, American Airlines, Caterpillar, very interested to see what Caterpillar's earnings are. And then Thursday night, you get Microsoft and Alphabet, Intel, Snap, Roku, but Microsoft and Alphabet are your big headlines, and then your major oil makers, Exxon and Chevron, going to be reporting on Friday. Fridays are never really interesting. So I'm going to run you back just through where we're currently at, having now closed 6 consecutive red trading sessions in a row, and last week being a Monday, Tuesday, Wednesday, Thursday, Friday, all 5 days of the week closing red. I didn't spend the time to go back. I didn't, because memory is good enough. COVID was the last time you had a Monday to Friday red close. Prior to that, I want to believe it was sometime in 2015 when the the Lucy passport crash took place, down 10% in the course of 4 or 5 days. It's not something that occurs. It just it doesn't happen. So now that it has happened, fantastic, great. So what? Minus 5.91% is the move down. We now have a 310 point range April. For those who actually go out there and utilize any kind of data, 310 points is pretty significant, and I will unfortunately need to unhide these rows so that I can move up. And moving on over again, 246 over in December, 390 in November in that major rally move that we had in November. 289 in October, Going again, 302 in that big September. Another one, 249 in August. July, 222, 286. You get the point. So we're at 303. Here's 301 going to March, if I recall. Yes, it is March when we bottomed last year. 252 in February, but again, 300 over in January. The point is being made, so you get the point that it is that we now have a 310 point month, and very, very, very likely, being that the full moon is on Tuesday, producing our bottom, our full moon bottom. We have accomplished the 23.6 retracement to the October lows. We have accomplished both the minus 3% and minus 5%, which goes unsaid because obviously you got minus 5%, you got minus 3%. Minus 5.91% over there on the SPX. And bring it on over here because, again, this is something I'm going to discuss and move forward with later in the video, later in the update. And that is here with the SPX spreads. And coming on to where we are with Friday having been OPEX, we got a minus 1% day. We had multiple minus 1% days going back on Friday and Monday, last week Friday, this week Monday. And moving on down, all of your puts trades, put credit spreads, every single one of them has paid off. And every single one of them right when you reached the problem. We've talked about the problem having been 40, 50, 45, problem having been that, or no, sorry, the problem having been 50, 55. And then we discussed the problem that we had there on Friday as we reached up to it. We sold off on it. They're not getting full credits, but they are working out. And they are working out for a number of people that have been messaging me, telling me that they have just been absolutely killing it. Keith, you, my friend, have really taken this to the whole new level since you began here. I really do applaud you for all the efforts that you have made on this, and you've dedicated yourself to the point to where you're now seeing that you can go in here and make $30,000, $40,000 every single day. One highlight that I am making over here is that as we go into Monday, again, just a highlight, we are now looking at 11 trading sessions since we have had a plus 1% move. 11 trading sessions. So keep that in mind because, again, we are looking at what very much looks like a bottom having been placed. This SPY close plus minus 1% is inaccurate. I did not update this. So don't think that you're going to take what you're seeing here on the sheet and say, oh, look, that's where it is. He's wrong. I haven't updated it because I got a lot of stuff going on over here in my personal life over the weekend. This is the reason why I haven't been able to do any one-on-one calls this weekend as well. But I want you to take note. None of your safe edges, 0, have hit. On Monday, didn't matter if the lower safe edge hit because we were playing the calls. And on Monday is when you got your big move to the downside. And that's the reason on Monday there was a 400% credit spread over there on the 5130, 5125s, which were in the money, filling that gap from the weekend. So I bring you over to the QQQ. Minus 6.2% last week. Didn't go and put my little, ooh, look, he's got a cute little check mark. Didn't put my check marks over here on the QQQ, but am updating because I see here we hit that 413. We broke that 416.79 track. That's exactly what the whole entire intention for those 430 puts was to be taking place. We had our first minus 2% day there on Friday, minus 2.44%, and one of the biggest down weeks as far as points go since COVID. 27 points to the downside, 3 red weeks. Same thing over here with SPX, 3 red weeks in a row. So on the QQQ, we leave you with this because, again, this is a bigger, broader, wider picture. That was a 6% down week. In April, we dipped 3.5%. May, we dipped 2.6%. June, 4%. July, 3.5%. August was the big one, 8.5%. September, 7.7%. October, when we bottomed, 8.4%. And we got minus 6% last week. Got to keep that in mind because it is a bigger, broader, wider picture of everything out there. And looking out here on the email that went out on Friday, OPEX Fuckery Friday, April 19th. Again, all these red weeks in a row just don't take place. And that tweet that was deleted, Israel just launched a massive attack on Iran and is rumored to have hit critical nuclear facilities, which could cause radiation to leak out into the world. And this tweet was deleted. This tweet was sent out by one of the bigger accounts out there on Twitter. Elon Musk even follows. And after that, while you guys were asleep, the ES had bounced 1.5%, the NQ 1.5%. And as you saw there on Friday, you closed down below all of it. So I want to bring you over to the charts first. Let's go to the charts. So here is the SPX gaps chart. We filled 1, 2, 3, and the big NVIDIA Ponzi scheme 4. All filled. As we are, that's on your NDX, going the wrong way. As we are over here on the SPX with this decline of 5.91%, we have come right to the 23.6 retracement going back to the October lows, broken our minus 5% level, all of it taking place more or less right there towards the end of the day there on Friday. Come in here with our 1 minute chart. And again, with that being the problem level up there, that 50.91, the breakdown that took place here into the end of the day, everybody looks at and says, oh my God. And more importantly, you're actually right, because there was an old algorithm that used to trade for years and years that always was markets don't bottom on Fridays. And it still remains pretty true that when you do get a downside move, they don't bottom on Fridays. When you close on the lows on a Friday, October 27th, when Israel invaded Gaza, our bottom, that was a Friday. We did not close on the lows on Friday, but this Friday wasn't that significant. So from a bigger, broader, wider point of view, we came down. We came down pretty nice. We have a lot of gaps to be filled, but we came down pretty nicely. And it's getting a little bit concerned that this might be all of the drop. Get to that in a little bit. Over here on the QQQ from the highs back here in March 21, ba-bam, ba-boom, ba-bomb. And where we came to, this is very significant, we filled this gap going back to January of 2018, which I'll zoom out for a little bit. But more importantly, we came right to the all-time highs from back there in 2023, right to the 2023 highs, and did not dip down below it. Like I was saying to a couple of people that asked about it, this is extremely significant for multiple different reasons. And I'll zoom out here, show you why. We're right up there at the December highs, literally right on it, right where what should be the wave 3 high. This 36% into that didn't put how many percentages we are up from the October lows. But again, there you can see multiple gaps down here to the downside that will wind up getting filled eventually. As of where we are for now, we have filled this gap from back here in January. So that is gone. We have no gaps above. None. Zero. Only the one from way back here, which is way too high not to be focused upon. As you can see, your prior support over here being that 425 area, this is the primary resistance area at the moment, 425. So should this week, with the number of big names that are going to be reporting, recover the QQQ back to and through 425, we're starting to look at it as possibly being an ABC and everything's completed. But more importantly, we're looking for that wave 4. We're looking for that wave 4 rejection somewhere here in this 425 area. We want to see it reject. We want to see it strongly reject. We want to see it look as everything together is supporting this rejection. And then we can start looking at the next move to the downside for 402, more likely coming down here to around 390, 395. That's the final bottom move on that. Come over onto the NDX, and again, looking at where we are, we've come to the 300 extension of this, which again, with this being a very impulsive move, impulsive waves to the downside, odds are in your favor that it is not to be an ABC. It's not a 1 wave, 2 wave, 3 wave ABC. Odds are in your favor that this will be a recovery bounce for a wave 4 and then a further wave down to the downside. Looking at the NDX from a wider point of view for where that downside move is, as you see here, you're coming right up to the December 2023 highs, right to it, and nothing being broken. The full moon is on Tuesday, and we're about as oversold as you could ever wish to be, which again stands into all of the odds very strongly supporting that this is undoubtedly a bottom being placed. Now we should be looking for a wave 4. And as I've shared for you in your emails, as you see, prior first moves down, 15, 16 days, which is where we're at. We're actually in 1 month, 20 days on the QQQ. And then somewhere between a 10 to 12 day recovery process before the next leg to the downside. This wave 4 would be a perfect area coming over here just down to prior to the NVIDIA Ponzi scheme earnings report. So we are looking right in there around that 17,400, 17,350 area over on the NDX. So move to the upside, 300 points, 400 points. That's what we're looking at over that. So I bring it back over to the charts because I am going to go over a couple more things before we leave this off. But where we're at right here, I will leave that one there. And again, this being earnings that are coming out, weekend Wall Street showing that we've got a gap up coming to us. Bespoke investment. Very interesting that 6% of the S&P 500 technology sectors stocks are above their 50-day moving averages. 6%. And then you have this that came out on Friday. QQQ ETF daily inflows 2.8 billion, the biggest move since November of 2014. And then you got to put on your conspiracy hat because this guy here, I like the guy, I like what he shares because, it makes you keep an open mind. But yep, talking about Powell ending the BTFP emergency bank liquidity on March 11th begins falling from that date. They did the same thing in January 2020 when he pulled the emergency repo interventions away and COVID hit. Hank Paulson did the same thing in September of 2008, right when the crash began. Crash actually began in 2007, but really started to crash in 2008. Just interesting to know, interesting to get a better understanding because it's your video game, it's your money, it's your future, it's your decision making. It's completely up to you. But it does make you start to understand how this video game works and why every day we're always mentioning over the past few weeks about the reverse repo, which takes place at 1:16 in the afternoon. So I bring you over here to the NDX, and what I'm looking at here is the daily. And here is that big 16,764.86, the all-time highs. Not looking at the December highs, which are basically the same thing, but looking at the all-time highs from 2021, right before the collapse began. We're right there to it. Big support line coming here off of the COVID lows and 2022 lows. Yes, very clearly, very obviously, a massive downside potential before even coming close to that trend line. However, looking at the NDX, looking at it on a daily, you are as oversold as you have been since COVID. You are as oversold as you have been since Russia went into Ukraine, right over here. You're as oversold as you have been when the buy divergence was created back here in October of 2022. So you are extremely oversold, and this is the reason why I sent out the email. Where is it? The big time trade update. The January 17, 2025 SPY 10 510 puts are up 60%. When I sent out this alert, March 28th, same day that we topped, I had 19 replies, either in chat or in email. And out of those 19 replies, there was a large number of them that asked, how much should I put into this? And as many of you who have done one-on-one calls with me understand and remember, I've always talked to you about keeping cash on the side because there's always going to be 3, 4, possibly even 6 big time trade opportunities every single year. And that's when you want to put a big part of your money into. Out of those ones that replied to me and asked me the question, I told them, put 60% of your capital into it. 60%. 60% there on Friday. So we'll get back to that as well. Coming over here and looking at the NDX on the weekly, and the weekly having gotten oversold, obviously seeing full stochastics, very bearish, looking for more downside movement. I highlighted over in the charts room looking at the volume, and as you see, the volume is not significant. It's not what you see in a sell-off, as you can see here. Your big sell-offs back here in April, your big sell-offs in October, or volumes increasing. You don't have that. And your money flow, once again, was moving to the upside after this week because you just had the biggest daily inflows, 2.88 billion into the QQQ. So again, going back to where we are on the charts, these are SPX. This is your NDX looking at daily. This is your XPX looking at the daily. Once again, extremely oversold. As oversold as we were going into the October of 2022 lows. As oversold as we were going into the Russia invades Ukraine lows. More oversold back during COVID, but COVID was COVID. Over on the full stochastics, already oversold. Over on the money flow, again, same thing, already oversold. And as I highlight over here in green, we had this running sell divergence since December on the SPX and never had anything take place. And now we've had it take place. And how did it come out? Well, it actually came out where it timed almost perfectly, like we were talking about with the elections with Obama. April 2 was when 2012 finally topped after having dropped 20% going into October of 2021 and having had 2 consecutive plus 10% quarters, same exact as we just had here going into April 2 of 2024. We had plus 10%, plus 10%, Q4, Q1 as we went into our top, And here's your decline that took place going into middle part of May over on 2012 and almost right down to the 2012 Open. Wider view of 2012. And here's your open, and here's your bottom. Almost identical here in May, coming down to your bottom. After that bottom there in May, the big move back to the upside, even higher than where we were. Understanding, at this point in time in 2012, we are still below the dot-com high, which is the same high as the 2007 highs. So having a bounce and having a move to the upside, as you see taking place here, not uncommon because we were coming off of that major 50% correction just a couple years prior to this. Come up here into September, as I've talked to a lot of you about already. September, then we get the next move to the downside coming here into November. So as we come back over here and look at the SPX on the daily and seeing our big major trend line, which is still moving to the upside, looking at the 2021 highs, 2022 highs, 48, 18, 62, 100, 150 points lower, absolutely 100% very plausible to get this bounce coming off of this oversold move, wave 4, bounce back up to the upside, 23, 38.2 retracement, and then the move to the downside to complete it. Right around to 48.12, everything not only being oversold, but then we would start producing some buy divergences on the weekly. And again, looking at the NDX, how everything is inside the NDX, looking over at the weekly over here on the SPX, how we're just now starting to come into oversold territory. We still have very bearish on the SPX indicators to the downside. This full stochastics moving down, money flow moving down. But what a lot of people didn't pay attention to or watch, what you had there on Friday, which I will pull over here, is how your Dow was ripping on Friday. How the Russell 2000, not ripping, but this is supposed to be your weak link over here, the Russell 2000. And all that you had was NASDAQ, 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 NASDAQ. Everything you see red here, all NASDAQ, all. As if they were baiting people to try and get short as we go into our big earnings week. So pull that back off screen, put it back where it belongs, and we come into, oh yeah, never mind. That has nothing to do with what we're discussing here at the moment. Where are we? Again, backtracking, having had these excessively multiple weeks to the upside, nothing that we had seen ever except back in 1970 after Nixon got busted for his I'm not a crook. The big drop to the downside, obviously Vietnam plays in. And then coming here from 1970, the 20 green weeks with 3 red weeks up to the top, almost up back up there. The, if I recall from memory, 11, 12, 14% decline coming here, multiple months coming off of April. Coincidentally, down here into October, and then another 14 green weeks, 2 red weeks as they went into 1972. And then that was also because where this bounce took place, that was when my father was making me. So that was obviously a reason for the rally. Right around here is where my dad was bouncing up and down on the bed. So 2012, downside, very possible. Likely, we will see because we are oversold. And I'll bring you on to one more set of charts before I start punching people in the face. The S&P futures, I've been tracking this impulsive wave to the downside, as you see here on your support. Support was broken on the fake attack on Iran. And again, Iran and Israel have been pissing in each other's fucking tea for 40 fucking years. ain't shit gonna take place down there in Israel and Iran. It ain't gonna fucking happen. Here we are with the bottom, boom, 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 and then the bounce right back up there. Look at that move, and then your decline into the middle of the day because, oh, why not? Let's sell the QQQ off because everything is inside the QQQ. Look at it again on SPY. SPY having made the move down, coming right down fractionally to around that 491.50 area, just down here into the February, what is this, February 15th, February 12th, Valentine's Day lows, right on down here to old resistance, down to support. Perfect little area to be getting out of those January 2025, 10 months away in the money puts at plus 60%, with plus 60% of your capital having been used to get into the trade. Looking at SMCI. SMCI was the big move to the downside there on Friday. Friday down 23%, I believe it was on Friday. SMCI can drop 75% from its all-time highs. It will still be green for the year 2024. So get off the noise. So I bring you here onto the SPX Weekly. The SPX Weekly having now just produced 3 red weeks in a row. 3. You can go back as far as you want to go. You don't see 4 red weeks in a row. You just don't see it. Here's 5 with COVID. 3. We can go back, let's go back 10 years. All right, because I'm pretty sure I got the data going back there. Yeah, I do. Come back off COVID, prior to COVID. You got your 3, your big move there in 2020 or 2018. 20% decline. 3 red weeks, 3 red weeks. We had 3 red weeks over here in June of 2017, which weren't really red. We had 4 over here going into Brexit. We had 4 way back here, 2014. You don't see 4 red weeks in a row. You just don't. So for those who want to take advantage of it because you don't see 4 red weeks in a row, it's up to you. For those that want to take into consideration as well, looking at it, that we have now produced a 300-point month. 310 points over there on the SPX. You can take that into consideration as to selling your put spreads or buying calls. Totally up to you. But now is when the pain comes in. 32 trades. We started here on December 28th. And the first trade, the January 19th SQ80 puts, they went 423%. We've now given out 22 trades. We've just finished our 76th trading session of the year. So, not being a rocket scientist, let's do that. 76 divided by 22. And that is an average of getting 1 trade alert every 3.45 trading sessions. Now, on these trades, okay, I'm going to run these numbers by you and hit you dead between the fucking eyes. Full trade, $1,000 into every single one of these trades. Nobody gets out at the top. Perfect entries, perfect exits. They only happen in prison showers. But running the numbers there for you, looking at $1,000 into each trade, you would be up 28 grand, having put only $1,000 into every trade, other than the January 17th, 2025 SPY 510 puts, because those were $17 when I got into it. Looking at it from taking your 30%, only your 30%. As soon as you got in the trade, you immediately put your 30% trade on there. Only doing $1,000 on every single trade, you're up $5 grand, $5,500. And this This is taking into consideration trade number 20, the April 5 JPM 190 puts, which never, ever, ever worked. From the moment they were entered into, they never worked. And that's taking a full 100% loss on that trade. You'd still be up $5,500. But looking at how that is trade number 20 and going on here as to how this works. Trade number 1, $1,000. 30%, take your profit, get out, move on to the next trade. 30%, get your profits, get out, move on to the next trade. Once you're through trade number 1, trade number 2, whatever trade it is that you decide, you now automatically have a stop loss. You're on trade number 5. You want to use a tight stop loss and only use it to trade number 4? Go ahead. You want to only use it to trade number 3? Go ahead. You want to go all the way back to $1,000 and use it as a stop loss? Go ahead. I'm pretty sure that a lot of your kids go to private school. I'm pretty sure that a lot of your kids go to college. You pay a hell of a lot more annual tuition than $1,000. And the education that you get doing this, sorry, but you can't compare this to any job out there. Because again, with trade number 20, JP Morgan having been a failure, and here with it would have been $136,522 into the trade, I'm pretty fucking sure that anybody at that level would have already been putting a stop loss in to make sure that they don't lose that $100,000 level. So it's up to you. Really is up to you how you want to use the 32 trades, how you want to use the alerts, how you want to go out there and think that because you're able to day trade every day, that you can day trade. You can push buttons and day trade. You've got your credit spreads. Yeah. You've got your credit spreads. Yeah. You've got your QQQs, which, like I said, we put out there and trade. You got your big time trade alerts going out a little bit further saying, hey, you're up pretty significantly. You might want to take that trade off. And more importantly, you've got access one-on-one. Because I dedicate my time for this, because I kind of wish I never even opened this website. I never even started this service. Because for every absolutely golden trader, I got to go through 9 knuckleheads who can't tie their fucking shoes. But I do it for that one who's going to change his life, who's going to change his family's life, who's going to change the lives of people around his family. Message me directly. I don't care what time of the day it is. Want to do one-on-one calls on the weekends? Schedule them with me. This weekend, I couldn't. I've got shit going on with my family. It's 118 degrees over here. People's water is starting to dry up, the wells. Catch me in the chat room. Ask me whatever questions you want, because like I always do, I want to be able to show you why something is my answer, than just give you an answer. And if you did a one-on-one call with me already, I know how to answer your question appropriately, because I know where you're at. I know what you got going on with your life, and I know what you can and cannot risk. So enjoy yourselves. Enjoy your Sunday. Happy 420.